Hi, everyone. This is Anne-Marie Van. Today is Tuesday, October the 10th, and this is the Moneyball Morning Report for the Benzinga Pro platform. The sun is actually shining today in Scotland, so put a note there. Let's see how many days it goes for. They're calling for snow this weekend. That's very interesting. So let's take a look at what's going on with the ES and the SPY. Yesterday when we spoke, I talked to you about what the green elements were in the market before the market started turning around and running to the upside. So you might have this question in your mind that says, well, how did you know that it was going to run to the upside? And so here are the things that are completely simplistic. Nevertheless, they're spot on just about every single time. And the first thing is, let's look at the month. If I look to the left and I see the low of the month getting recaptured, we're going to bring in bottom pickers. Okay, so notice that happened day before yesterday, right? Came in right here and they held it into the close. So if we're looking at this space, remember my supposition was, listen, we'll move up and then we'll pull back. Everybody's talking about being long. Everybody's talking about being long. Put gamma is negative, and so if we've got all of this formation in the backdrop, it tells us that there is a floor under price, meaning we're not going to drop off and, go into the dumpster. However, what we're doing is coming into resistance that should play out as negative pressure that pulls us back in. So remember what the market does. It takes the most of the people in the wrong side and takes the fewest people on the right side. And so what we have to do is go, oh, all right, let's see what people are thinking, right? War machine, things are going badly. But I did put a post out that said, listen, so much unrest in the Mideast that these sort of things just give a little hiccup to the market and then it goes where it's supposed to go. We were very oversold. See the Keltner band coming down into the daily formations. From a monthly perspective, we came right back into the ribbon, right? As you know, that ribbon is the EMA 620 from TrendSpider. Use it, it's lovely. Okay, and now what the traders are trying to do is recapture this area from a monthly perspective, which is the low of August. And the low of August was 43.50. Now we're above that zone currently, but notice what's happening. We move up and then we test support, but we make another high and then we test support. Remember what I talked about yesterday. As long as we are testing higher, if we come into the floor, and that floor could be all the way down here at 43.62, right? I'm going to move this one up so you can see it. 43.62, literally all the way to 43.45, 43.46. That could be the squishy area that the price action pulls. So my general supposition is the following. Our daily trend is negative. When a trend is negative and a momentum band, like the Keltner channel, is also negative, we will bounce into resistance and everyone who was long will say, thank goodness, I'm even, I'm getting out of the trade. And notice that's exactly what happened at 43.82 this morning. So what are we expecting? We know 43.62 is the overnight low in the current formation. But for 2 days prior, that number on the high is somewhere around 43.57. So this is the reason that I've said, hey, listen, between 43.67 and 43.57, there is a shot that price action fades into that area. We have wholesale inventories coming at 10. We have some auctions coming, and then we have Fed speakers all day. What are the traders going to try and do? Well, they're going to try and carve out a new higher low, right? Every single newsletter I read today was, hey, we're going long. So listen, some of those guys are really, really good. And it could be that we have a long, but how about let's do what we know we're supposed to do and test the floor of the formation to see that it holds before we decide we're going to take any extended longs. All right? Market's still holding up. Levels to watch today, 4,400 to 4,406. Remember, they're going to blow past those edges. And let's go to the weekly over here and see where that edge is going to be. It could be here, all the way to 44,1350. And remember, when we lost 43.92, that was that zone where we said, you know, look out below. Okay, so we're going to walk through those. A lot of lines in the sand there. What is trend? Well, big trend is down. Little trend is up. Let's see what the 4-hour looks like. Also up, right? So we have tight formations trying to recover into frontline resistance. The line in the sand at the top is 43.82, but intraday traders, we want to watch for the fade where we can go long. Take a look at this candlestick here. Yesterday at 3 o'clock, that's savage, right? That is a savage move. So don't be surprised if it retests it. I suspect that what we might need to look for is a topping formation here. That is, 1, have I failed to head higher? 2, have I broken support? That has not happened yet. And 3, have I bounced and made a lower high? Now, you might say to yourself, hey, I can't do that on a 4-hour. It'll take too long and I might miss the move. Well, try it on a 30-minute, right? And right now, that 30-minute says, I keep getting higher highs and I'm holding the floor. So it's still telling us to buy the bounce, right? Where is that going to have a problem? Up here, 43.77. If we can't get above that zone, we know that there's going to be either sideways or choppy motion. All right, let's go to SPY. I did a lot of analysis there, so I'm just going to go for the levels for the next ones. All right, so let me go to the 4-hour here. SPY's trying to do the same thing at frontline resistance. The wick takes us to 434, which I don't guess that we don't have a chance there. I think 434 is a great line. You know, we have the call butterfly expiring today. I would like to see it go to 435 before we get out, but ladies and gents, I would suspect that right into the open is where we need to close that call butterfly and just take the long side, the 435, the 430 to 435s, and close them out, right? So we're long the 430, short the 435s, long the 440s. We want to close the top end out so we can get 250, 260 out of the spread. Maybe we could get that. I think we easily could. Okay, so that's what we're looking for. Top end 435. Could we test support? You betcha. Look, 1, 2, 3, 4 days in a row after a gigantic move down. A lot of people positioning into fourth quarter seasonality. But remember, everybody in quotations, the majority of people get caught flat-footed and they get in at the wrong time and they expand their risk. What do we need to look for? Have I failed to head higher? Yes. Have I broken support? Yes. But I've also recovered it. So until I lose that support the second time, I don't really have a nice 4-hour formation that tells me I can go short, right? Let's take a look at the Qs finally. Qs are very hard to butterfly because they move so big, so fast. I'm going to do some more analysis on here for us to see what kinds of... I just feel like the market makers have us gamed on this one, and it's hard to figure out what to do from this perspective. All right, look at them straight through the gap. That has not occurred in the SPY. So these guys are sharply recovering. Remember, cybersecurity is part of the war complex, and along with Raytheon, Nortel, Lockheed Martin, the whole group of them, they are running very green right now, and we're going to have to let that one exhaust. And it will, because all the data we read is, you know, Israel's great at building their own weapons and having an incredible arsenal. So we'll see what happens with this knee-jerk reaction. All right, my suspicion is that it pulls back. Okay, but where are we? See this edge right here? Sellers came right into the 366 zone. That's going to be the area to breach. Okay, 366.80. If it pulls up, pulls back a little bit and holds under this pressure, look, the daily is at a cross. And here, look at this, old resistance, new support early this morning, and it's run off the rails to the upside. Okay, so short sellers are really feeling the pinch right now. I think they're going to get hurt. And so that's going to be good for more upside pressure into potentially 39.70. But we want to see how it holds on the fade. The fade is very, very important. All right, quickly on the NQ. Same sort of thing, running up this flagpole. Look at it. It's above this area, but below 15,250. That's going to be the ceiling that we watch for, 15,248.50. And the floor will be 15,016 to see what's going on. This is beginning a topping formation. But remember, see how green this ribbon is? Pullbacks are going to be buy zones at the first pass. So that's what you have to think about. It is not going to collapse. There's too many short sellers trapped in here for the chart to fade, if that makes any sense. Let's see. Gold getting a... Gold's fading. So let's go over to Thinkorswim and have a peek at the dollar. And remember, if this dollar starts moving up, everything long you have in equities, get out. Okay? Not a good place. If the dollar starts running up, you got to get out. So right now, it is fading and holding lower. And so that gives the market a little bit of added pressure. But it does have support down at the 105 area. Okay? All right. That's it for me, folks. I'll be on Wolf Financial this morning on a Spaces, so please join me there.